Hey miss, can you please teach me all about percentage taxes and local direct taxes in the Philippines?
Why should I do that? I don't know you in the first place.
I just want you to be my friend. Let's make a deal.
What is that?
If you teach me, I will be your personal servant for 1 week.
Sounds good. Let's
So-
have a deal.
So let's start.
I have a video regarding that topic. Just watch this.
Other percentage taxes. A percentage tax rate of 3% are imposed on individuals, business, and transactions whose gross receipts does not exceed 1,919,500 pesos. A percentage tax rate of 3% is imposed on domestic land carriers and keepers of garages based on their annual gross receipts. In year 2006, revision was made on minimum gross receipts. The following are the revised amounts based on Revenue Regulation 9-2007. On Manila and other cities, the jeepneys for hire should consider a minimum gross receipts quarterly of 65,700 pesos and monthly of 21,900 pesos. While in provincial areas, they should consider a minimum gross receipts quarterly of 32,900 pesos and monthly of 10,967 pesos. Public utility buses not exceeding 30 passengers should consider a minimum gross receipt quarterly of 98,600 pesos and monthly of 32,867 pesos. For those buses exceeding 30 but not exceeding 50 passengers should consider a minimum gross receipts quarterly of 164,200 pesos and 54,733 pesos monthly. For those buses exceeding 50 passengers should consider a minimum gross receipts quarterly of 197,100 pesos and monthly of 65,700 pesos. Taxis in Manila and other cities should consider a minimum gross receipts quarterly of 98,600 pesos and monthly of 32,867 pesos, while taxes in provincial areas should consider a minimum gross receipts quarterly of 65,700 pesos and monthly of 21,900 pesos. Car for hire with chauffeur should consider a minimum gross receipts quarterly of 82,100 pesos and monthly of 27,367 pesos. Car for hire without chauffeur should consider a minimum gross receipts quarterly of 49,300 pesos and monthly of 16,434 pesos. International air carriers refer to a foreign airline corporation doing business in the Philippines. International sea carriers refer to a foreign shipping corporation doing business in the Philippines, and they shall pay a tax of 3% of their quarterly gross receipts. A tax rate of 3% based on gross receipts of the preceding year is imposed on franchise of radio and television broadcasting companies, while a tax rate of 2% is imposed on franchise of gas and water utilities. A 10% tax rate is imposed on the amount collected upon every overseas dispatch, message, or conversation originating from the Philippines. The said tax imposed shall not apply to government, diplomatic services, international organizations, and news services. Banks and non-bank financial intermediaries performing quasi-banking functions whose maturity period is less than 5 years have a tax rate of 5% and a 1% tax rate for the maturity period of more than 5 years based on interest, commissions, and discounts. Dividends and equity shares in net income of subsidiaries have zero tax rate. Royalties, rentals of property, real or personal, have a tax rate of 7%, and net trading gains within the taxable year have a tax rate of 7%. Finance companies not performing quasi-banking functions have a tax rate of 5% based on interest, commissions, and discounts treated as gross income under the code. Short-term period maturity have a 5% tax rate and a 1% tax rate for long-term period maturity. Life insurance premiums received have a 2% premium tax. Total premium received in the Philippines have a 5% premium tax. Premiums on health and accident insurance is not subject to 5% premium tax. Income earned from services which can be pursued indefinitely are not subject to 5% premium tax. Reinsurance fees, reinstatement fees, renewal fees, as well as penalties paid to the life insurance company are subject to 5% premium tax. Investment income realized from the investment of premiums earned is considered exempt from the further imposition of 5% premium tax. Premium deposit fund is subject to 5% premium tax. Premiums received by agents of foreign insurance companies are subject to 10% premium tax, and a 5% premium tax is imposed on premium payments obtained directly with foreign companies. For amusements, cockpits, cabarets, and night-and-day clubs are subject to 18% tax rate. Boxing exhibitions are subject to 10% tax rate. Professional basketball games are subject to 15% tax rate, and high alay and racetracks are subject to 30% tax rate. The winnings in horse races are subject to 10% tax rate. Double, forecast, quinella, and trifecta bets are subject to 4% tax rates. The owners of winning race horses are subject to 10% tax rate. One half of 1% tax rate is imposed on the gross selling price on every sale, barter, or exchange of shares of stock listed and traded through the local stock exchange. If the shares of stock sold or exchanged through initial public offering is not over 25%, a 4% tax rate is applied. If over 25% but not exceeding 33 and one-third%, a 2% tax rate is applied. And if over 33 and one-third%, a 1% tax rate is applied. Privilege store, or commonly known as tiangge, refers to a stall or outlet which is not permanently fixed to the ground for the purpose of selling a variety of goods or services for short durations of time or during special events. If the store engaged in any business activity for a cumulative period of more than 15 days, it shall not be considered a privileged store and shall registered with the BIR as regular taxpayers and required to pay taxes such as income tax, value-added tax, percentage tax, and withholding taxes. Any business where the aggregate gross sale or receipts do not exceed 100,000 pesos during any 12-month period shall be considered exempt from percentage tax. The following are requirements in filing the returns and payments of the percentage taxes. For non-large taxpayers, they shall file and pay their return within 20 days after the end of each month. For large taxpayers, they should file and pay the returns within 10 days after the end of each month. For persons retiring from a business subject to percentage tax, they should file and pay the returns within 20 days after closing his business. Withholding of percentage taxes. Bureaus, offices, and agencies of the government are required to deduct and withhold the taxes due to payees on account of such money payment. Percentage tax is based on gross receipts, while withholding of percentage tax is based on gross payments. Percentage tax and withholding of percentage tax are of the same tax rates, but differ in tax basis. Returns and payments of taxes withheld require the taxpayer to submit BIR Form 1600 in duplicate form to be filed in the tax to pay to the authorized agent bank located within the Revenue District Office having jurisdiction over the place where the government office is located. Certificate of percentage tax withheld at source shall be furnished to each proprietor, operator, common carrier, and franchise holder in triplicate. 2 copies are given to the payee, and the remaining copy is retained by the withholding agent. Punishable acts: failure to deduct or withhold any internal revenue tax, failure to remit the taxes deducted and withheld, and failure to file the return or issue certificate required shall be fined of not less than 5,000 pesos but not more than 50,000 pesos, or imprisonment of not less than 6 months and 1 day but not more than 2 years, or worse, both. Penalties: in case of simple neglect, a 25% penalty is charged, and in case of willful neglect, a 50% penalty is charged. On any unpaid amount of tax, an interest rate of 20% shall be assessed and collected. The fines to be imposed for any violation of the code shall not be lower than 30,000 pesos or twice the amount of taxes, interest, and surcharges due from the taxpayer, whichever is higher. Any person who willfully attempts to evade tax under the code shall be fined for not less than 30,000 pesos but not more than 100,000 pesos and shall suffer imprisonment of not less than 2 years but not more than 4 years. Remedies. Pre-assessment shall be done within 3 years after the last day prescribed by law for filing of the return. The following remedies are granted by the Commissioner of Internal Revenue. First is to compromise the payment of any internal revenue tax. Second is to abate or cancel a tax liability. And third is to credit or refund taxes. Restraint of personal property. The Commissioner or his duly authorized representative, if the amount involved is in excess of 1 million pesos, or the Revenue District Officer, if the amount involved is 1 million pesos or less, shall seize and distrain any goods to satisfy the tax. Real property may be levied upon before, simultaneously, or after the restraint of personal property belonging to the delinquent. The Commissioner or his duly authorized representative finds that proper taxes should be assessed, he shall first notify the taxpayer of his findings. The taxpayer shall be required to respond to said notice. If the taxpayer fails to respond, the Commissioner or his duly authorized representative shall issue an assessment based on his findings. If protested, the taxpayer shall file a request for reconsideration within 30 days from receipt of the assessment. Within 60 days from filing of the protest, all relevant supporting documents shall have been submitted. If the protest is denied in whole or in part, the taxpayer adversely affected by the decision or inaction may appeal to the Court of Tax Appeals within 30 days. Forfeiture of tax credit which shall remain unutilized after 5 years from the date of issue shall not be allowed as payment for internal revenue tax liabilities, and the amount covered by the certificate shall revert to the general funds. Ethical considerations with regards to transfer and business taxation. Tax avoidance versus tax evasion. What's the difference? Of course, their legality. Tax avoidance happens when the taxpayer legally minimizes his tax liability, while tax evasion occurs when the taxpayer resorts to unlawful means to lessen or to get away with his tax liability. Tax planning is a completely legal means for saving taxes. The basic idea is to arrange one's activities so as to avoid the impact of the tax law as much as possible.
So ganun pala yun. May tanong lang ako. So kapag hindi nakapagbayad ng tax, okay lang pala?
Bakit?
Kasi pwede ko namang kunin yung puso mo eh. Di ba personal property mo naman yan?
It's not my property anymore. Somebody owns it now.
Sayang, hindi ka na pwedeng maging akin?
Alam mo, hindi ka naman VAT at yung boyfriend ko hindi rin excise tax para pwede kayong pagsabayin.
Okay. Turuan mo na nga lang ako ng local direct taxes.
Okay, let's watch this.
Local direct taxes. What does it composed of? First is the community tax, or most commonly known as cedula. It is a tax of a fixed amount upon all persons of a certain class residing within a specified territory without regard to their property or in the occupation in which they may engage. Cities and municipalities may levy the annual community tax. It is up to the sangguniang panglungsod whether or not to levy the community tax. But if the sangguniang panglungsod decide to impose this tax, it must enact a tax ordinance which shall take effect on January 1, 1992. Who are liable to the said tax? Individuals of 18 years of age and residing in the Philippines who, first, has been regularly employed on a wage or salary basis for at least 30 consecutive working days during any calendar year. Second is engaged in business or occupation. Third, owns real property with an aggregate assessed value of 1,000 pesos or more. And fourth is required by law to file an income tax return. They shall pay an annual community tax of 5 pesos and an annual additional tax of 1 peso for every 1,000 pesos of income, which in no case shall exceed 5,000 pesos. Domestic and resident foreign corporations engaged in or doing business in the Philippines are subject to the annual community tax of 500 pesos and an annual additional tax which in no case shall exceed 10,000 pesos according to the following schedule. First, 2 pesos annual community tax is imposed for every 5,000 pesos worth of real property. And second, 2 pesos annual community tax is imposed for every 5,000 pesos of gross receipts or earnings. The following are exempted from the community tax. First are the diplomatic and consular representatives, and second are the transient visitors when their stay in the Philippines does not exceed 3 months. The following are exempt only for the current taxable year. First are the corporations established and organized on or after July 1. Second are the transient visitors whose stay in the Philippines is not more than 3 months. And third are persons who come to reside in the Philippines on or after July 1 and become 18 years of age on or after July 1. The community tax shall accrue on the first day of January of each year, which shall be paid not later than the last day of February of each year. An individual who reaches the age of 18 or who loses the benefit of the exemption on or before the last day of June shall be liable for the community tax on the day he reaches his age or upon the day the exemption ends. However, if an individual reaches the age of 18 or loses the benefit of exemption on or before the last day of March, he shall have 20 days to pay the community tax without becoming delinquent. Corporations established and organized on or before the last day of June shall be liable for the community tax for that year. However, corporations established and organized on or before the last day of March shall have 20 days within which to pay the community tax without becoming delinquent. Both the individual and corporation shall pay their community tax due in the city or municipality where he resides and it operates. Penalty for delinquency. If the tax is not paid within the time prescribed, there shall be added to the unpaid amount an interest of 24% per annum from the due date until it is paid. The total interest on the unpaid amount or portion thereof shall not exceed 36 months. The prescriptive period for the collection of local taxes is 5 years. The community tax certificate required to be presented shall be the one issued for the current year, except for the period from January until the 15th of April. Republic Act 7160, otherwise known as the Local Government Code of 1991, governed the appraisal and assessment of real estate and the levy, collection, and administration of the real property tax in the Philippines. The revisions in the law were intended to increase local government revenues from real property taxes, upgrade assessment procedures and practices, and bring about an equitable distribution of the tax burden. There is no proper definition of real property, but the said code states that it is a province or city or a municipality within the metropolitan Manila area may levy an annual ad valorem tax on real property. Real property tax is a direct tax on ownership of lands and buildings, and it does not impose any conditions nor restrictions. The real property tax imposed in the Philippines is an annual ad valorem tax levied on local government units on real property within their jurisdiction, determined on the basis of a fixed proportion of the value of the property. The real property tax system encompasses 4 operations. First is tax mapping operation. Second is tax assessment operation. Third is tax records management system. And fourth is tax collection system. The main formula for the computation of real property tax is as follows. The fair market value is multiplied to the assessment level to come up with the assessed value. Assessment level is the percentage applied to the market value to determine the assessed value of the property. It is the maximum rates of the assessment levels as prescribed in Section 218 of the local government. The assessed value is now multiplied to the tax rate to come up with the real property tax. The tax rate is based on localities. The basic real property tax rate in Metro Manila areas is 2% of the assessed value, while in provinces, 1% real property tax is applied. Rates on special levies. Special Education Fund have a 1% real property tax. Annual tax on idle land of not exceeding 5% of the assessed value of the property. A tax on land especially benefited by public works projects on local government of not exceeding 60% of the actual cost of such projects and improvements. Exemptions from real property taxes. First are those owned by the government. Second are those exclusively used for religious, charitable, or educational purposes. Third are those duly registered cooperatives under Republic Act 6938. Fourth are those machineries and equipment used for environmental purposes. And lastly are those machineries and equipments used by the local districts and government-owned or controlled corporations engaged in the supply and distribution of water and electric power. Payment of real property tax and installments. The basic real property tax and the additional tax for a special education fund may be paid in lump sum on or before March 31. However, the taxpayer has the option to pay the same without interest in 4 equal quarterly installments. The first installment is on March 31. The second installment is on June 30. The third installment is on September 30. And the last and fourth installment is on December 31. Take note, delinquencies are settled first before crediting for the current period. A tax discount of 20% is given to any advance payment of the basic real property tax and additional tax of special education fund. Remember, when protesting, protest should be made in writing and to be sent to the provincial city or municipal treasurer 60 days from the receipt, and when favored, the amount protested should be refunded to him or credited against his existing or future liabilities. If denied, the taxpayer can appeal to the local board assessments appeal, then to the central board of assessment appeal. The local treasurers may compromise delinquent taxes and penalties. Real property taxes shall be collected within 5 years. In case of fraud, the period is within 10 years from the discovery thereof. Local government unit may avail of remedies, namely administrative and judicial remedies. Such remedies are cumulative, simultaneous, and unconditional, or a combination thereof.
Hay nako, ang dami talagang dapat tandaan. Alam mo, ang masasabi ko lang, ako yung gobyerno at ikaw yung tax.
Bakit mo naman nasabi yun?
Kasi I can survive without you.
As far as I'm concerned, you're just like the government. Magagamit kayo. The government used the tax to defray the expenses while you gamit me to pass the exam.
Di totoo yan. Diba ang sarap ng pakiramdam pag nakapagturo ka?
Shut up! So simula ngayon, you're my personal servant. Bye!
Wait, can I get your number? I'm really interested into you.
Wala kang makukuha ng hindi mo pinaghihirapan. Have a grade of 1.5 in your tax and you'll get my number.
Parang malabo yata yun. Street kasi, sir namin.